Hello and welcome back to the channel. Today we're taking a deep dive into the state of the United Kingdom's economy as we look ahead to 2026. The picture is complex, with the long-term effects of Brexit continuing to shape the country's economic landscape. So, let's break down the key numbers and what they really mean. First, let's talk about the big one, GDP. In 2026, the UK's nominal GDP is projected to be around $3.35 trillion. Now, that still places it among the top 10 largest economies in the world, which is no small feat. However, the growth story is less optimistic. Forecasts are hovering between 1.4 and 1.6%. This slower pace is a direct result of several factors, including shaky consumer confidence, ongoing trade friction with our European neighbors, and persistent disruptions in supply chains. Compared to other G7 nations, the UK's economic engine just isn't revving as high as it used to. A major reason for this is inflation. It remains a thorn in the side of the economy. In 2026, consumer prices are expected to rise by about 5.1%. We've all felt the squeeze from volatile energy costs and fluctuating currency values over the past few years, and it looks like that pressure isn't going away entirely. To combat this, the Bank of England has been hiking interest rates, which are now sitting at their highest level in over a decade, around 4.25%. While this is meant to cool down prices, it has a side effect. It erodes our purchasing power. Real wages are growing by less than 1%, which means people have less to spend. And since consumer spending makes up about 65% of the UK's entire GDP, any reduction there has a huge ripple effect. Then there's the national debt. It's another significant concern. The UK's debt-to-GDP ratio is projected to hit a staggering 107%, with the total debt mountain reaching £2.55 trillion. This high level of public borrowing is a hangover from previous economic shocks and ongoing spending on social programs and healthcare. The problem is, just paying the interest on this debt eats up a massive chunk of the government's budget, leaving less money for crucial investments in things like infrastructure or new technologies that could stimulate growth. Economists are clear. If growth remains sluggish, managing this debt will be a major headache for years to come. So, what about trade? It's been a mixed bag since Brexit. Total exports are projected at £745 billion for 2026. Interestingly, the EU remains our biggest trading partner, accounting for about 42% of that trade. However, new tariffs and customs procedures have added friction, making it slower and more expensive to sell goods to the continent. On the other side of the coin, we're importing more than we're exporting, with imports standing at £840 billion. This creates a persistent trade deficit. The weaker pound has been a double-edged sword. It makes UK exports cheaper for foreign buyers, but also drives up the cost of importing essentials like energy and raw materials, which just adds more fuel to the inflation fire. Looking at the job market, the signals are confusing. The unemployment rate is expected to be around 4.3%, which is relatively low historically. That sounds good, right? But beneath the surface, there are real skill shortages in key sectors like manufacturing, hospitality, and logistics. While people have jobs, wage growth is barely keeping up with the cost of living, putting immense pressure on households and small businesses. Changes to immigration policies have also made it harder to fill these skilled roles, which in turn impacts productivity and our long-term economic potential. But it's not all doom and gloom. The UK's financial services sector remains a powerful engine. The City of London is still a global hub for banking, insurance, and capital markets, contributing nearly 7% to the UK's GDP and attracting a lot of foreign investment. However, even here, there are challenges. Some financial firms have moved parts of their operations to EU cities like Frankfurt and Paris to maintain seamless access to the European market. For UK policymakers, it's a constant balancing act, trying to stay competitive globally while navigating a new, independent regulatory path. In conclusion, the UK economy in 2026 is at a crossroads. It's grappling with slow growth, stubborn inflation, high public debt, and a complicated trade environment in its post-Brexit reality. The resilience of the financial sector provides a strong foundation, but structural weaknesses in other areas are creating significant headwinds. The path forward will require a delicate balance of fiscal discipline and smart, targeted investments to boost growth. Without these strategic moves, the UK risks falling behind its G7 peers in the decade ahead. What are your thoughts on the future of the UK economy? Let me know down in the comments. Thanks so much for watching, and if you found this analysis useful, please give it a like and subscribe for more content. See you next time.